So this is the worst market in its third year in the venture capital space in terms of raising funds.
What is it that you do that is different? And what is it that you're going to do to double, triple, even put, let's go a lot higher than that as far as money is concerned.
Opportunistic acquisitions and debt and equity make it very relevant. Finding the upside of the downturn make it very relevant.
My best investments that have worked out have had crazy income for the amount, and income is what you love.
Can you raise capital in the toughest VC market? Here's what top family offices have done in 2025 to stay ahead.
What advice would you give to people in the room who are trying to go out and raise capital? Obviously, it's good to be in the family office room like this. What else might they do?
Well, the first piece of advice I would say is stand out. Make sure it's different. Even if it's something that's similar, let's say we're talking about PR. There are a lot of PR firms right now that are rolling up into, there's a lot of roll-ups going on out there. What's unique? What is it that you do that is different? And what is it that you're going to do to double, triple, even put, let's go a lot higher than that as far as money is concerned. Make it interesting, but be real. I also wouldn't be grasping at straws. I'd keep it very real, and I'd have my little ducks in a row rather than just all over the place. Be prepared for the questions, but be different.
Sure. I'd say there's a couple ways I'd answer that. So our company, we specialize in opportunistic or non-correlated investments. And what does that mean? That means right now we're in one of the biggest downturns in commercial real estate that's been since my lifetime. I mean, I lost everything in the residential collapse, 2009-10, but opportunistic funds right now, not value add multifamily or things that aren't quite penciling yet, but opportunistic acquisitions and debt and equity make it very relevant. Finding the upside of the downturn make it very relevant. So repurposing strategies that take harness of the downturn, also leaning into, right now we're at a very unique time, right? This isn't typical. I mean, we're in the middle of, we just got done with a black swan event. Interest rates skyrocket, insurance costs are high. Materials, labor went up. We have 2 proxy wars going on through Ukraine and Israel. We just bombed Iran's direct war. We're in the middle of a trade war. There's probabilistically, this engineer inside of me says, hey, maybe we should think about alternatives. Things that aren't dependent on macroeconomics, things that don't ride the waves of the rest of the fundamentals of our portfolio. And so oil and gas is a component of that, right? Opportunistic certain investments in real estate or legal industry or healthcare. And how our organization continues to stay relevant is by offering alternatives outside of those, such as legal investments or investments in healthcare, ones that help to build true resilience even in downturns.
David?
Well, I agree. It's a hard time. There's been a lot of deals promoted with companies that were going to make money someday. I think the key thing to look at in a company is what is its real prospect to produce return. And the things I'm working on are geared towards making hundreds or thousands of % on capital income. My best investments that have worked out have had crazy income for the amount, and income is what you love. You know, getting into paying investments. Now, in the stock market, there are assets that are yielding real high that are out of favor, like the midstream pipeline companies. But my effort with my invention company is to promote things that have the potential to have game-changing wealth to transform a few dollars into a ton of dollars. Lottery ticket type winnings.
I agree with everything you just said, David. I think the most mispriced asset class on the market right now is the midstream MLP pipeline infrastructure. It's 70% gas, but it's priced almost 100% correlated to oil. Has nothing to do with oil. So I think you're really onto something there. Joe, how about you? Your thoughts?
The question being raising capital.
Yeah. How do you, and do you raise capital?
Yes, we raise capital. We don't tend to have to ask very hard these days because we're in Fund 6. We have our LPs, and it tends to be about a 2-week close, if you can imagine. We have been looking for some new investors just to diversify the investor pool, but we're kind of deal junkies. We see a lot of stuff that's beyond maybe what is committed capital investment opportunities. peripheral energy tech opportunities, other extraction-related industry-oriented stuff that's not minerals and royalties. And one of the things that attracts us is when someone's, say, staying in their lane, but really the ask is not an ask for the next 2 years. The ask is for the next 6 months. They're short asks, they're small asks. They're about accomplishing a discrete set of goals that they're going to focus in on with that capital that they're going to put to work. Kind of on the premise that the risk is reduced considerably, is that there is a line of sight to actually see that capital go to work and maybe provide some insight or solutions or quick failures that could then be used and turned into later successes for the entity or the venture.
Ray?
Join the Family Office Club by visiting familyoffices.com. We look forward to seeing you at our next live event.